All right, welcome to our global analysis. Our job here is to cut through all that noise and find the real signal. And today we are diving headfirst into the incredibly complex financial world of early 2026.
Okay, so picture this. It's February 2026, and if you're paying attention to the global landscape, you know things are, well, they're just not adding up. We're living in a world of total contradictions.
Yeah, this is really the heart of the matter. The market is telling two completely opposite stories right now. It's like it has a split personality. You've got these pockets of incredible strength, but then you zoom out, and the bigger picture looks, frankly, pretty pessimistic. I mean, just look at this. You can't ignore this kind of resilience. We're talking about market titans, absolute giants. In fact, a whopping 70 stocks in the S&P 500 are hitting 52-week highs. You see names like Johnson & Johnson, Chevron, Coca-Cola. I mean, that screams robust economic health, right? And yet, on the exact same day, you look at the broader market and it's a sea of red. The Dow, the S&P 500, the Nasdaq, they are all down. This is reflecting some serious, widespread anxiety among investors. It's a total classic disconnect. All right, so if that wasn't confusing enough, let's throw another wrench in the works. The IMF comes out with its global forecast, and guess what? They're projecting a surprisingly resilient global economy. They see growth holding steady at 3.3%. Now that number signals stability, not the slowdown everyone seems to be worried about. So what in the world is going on? How do we make sense of any of this? You've got markets telling two different stories. You've got geopolitical tensions simmering in the background. So what's the one thing, the one pivotal event that you should actually be focused on? Well, believe it or not, there is one, and it cuts right through all this noise. And it turns out the real action, it isn't on the trading floor at all. It's in a massive disruption to global trade policy. And this quote from Jennifer Hillman at Georgetown just nails it. The only winners have been the lawyers. This little piece of chaos has created a very specific and, yeah, a very surprising set of winners.
Now, that quote isn't just someone's opinion. No, it's the direct result of a single event that completely changed the game. We are talking about the Supreme Court's landmark decision on February 20th. In a move that shocked a lot of people, they deemed the Trump-era tariffs illegal. Just illegal. And that ruling, it comes with a price tag, a staggering price tag, $175 billion. That's the sheer scale of the financial fallout we're talking about here. A potential $175 billion scramble for refunds has just been unleashed. So you see, this ruling has kicked off an unexpected gold rush. A massive, massive transfer of wealth is happening as we speak. But the people who are benefiting from all this chaos, well, they're probably not who you think. Look at this. A whole new ecosystem has basically popped up overnight to capitalize on this decision. We're talking about specialized law firms, super opportunistic hedge funds, and even AI-powered platforms. They're all perfectly positioned to make a killing from the sheer complexity of getting these refunds. And hey, just a quick pause here. Please remember to subscribe to our Next Gen Invest Global channel and turn on the notification bell. Share and like our videos. The information in the video is compiled from open sources. It is not investment advice. Thank you. Okay, let's get back to it. So here's the playbook. Here's exactly how they're winning. The law firms, they're filing lawsuits for huge clients like Prada and FedEx, raking in millions in fees. The hedge funds, they're swooping in and buying up these tariff claims from smaller companies that need cash now. And the AI platforms, they're just taking a cut to process all the complicated paperwork. The key takeaway here is that they're all profiting from the friction and the chaos, not from the actual underlying economy. But here's the thing. A decision this big doesn't just happen in a vacuum, right? It's sending these massive ripple effects across the entire global financial system, and it connects directly to the much bigger geopolitical picture. And this timeline really shows you how critical the timing of all this is. You have the Supreme Court ruling in February, which completely changes the dynamic for the high-stakes U.S.-China trade talks scheduled for March, which in turn puts a huge spotlight on the Federal Reserve's upcoming rate decisions. Everything is connected.
Think about it. President Trump's upcoming visit to China for those trade talks, it's happening under completely different circumstances now. Before this ruling, tariffs were the main leverage point for the U.S. But now, the American negotiating position is seriously weakened by all this legal chaos and, let's be honest, a massive financial headache back home. And of course, all of this feeds directly into the Fed's thinking. I mean, you can imagine the conversations happening there. This new wave of uncertainty just heaps more pressure on them as they're trying to figure out their next move on interest rates. That potential rate cut everyone's been watching for, well, the decision just got a whole lot more complicated. So, this all leaves us with one final and I think really critical question for you to think about. In an era of legal chaos and huge political risk, an era where one court ruling can unlock $175 billion and completely reshape global negotiations, is the underlying economy still the real story? Or has the game itself just fundamentally changed? Something to chew on.